like to invite Eduardo Brunet. He's joined us all the way from Madrid. He is the founder and CEO of Greenward Partners. Eduardo, are you with us?
Yep.
All right. Welcome.
Hear me?
Yes, loud and clear.
Hello, everybody from sunny Madrid in Spain. I'm thrilled to be here and to be part of the Wall Street. So thanks, Peter. And I'm more thrilled also to share the panel with two of my role models, which is Aggregation and Remuneration. Basically, because of them and following their example is what actually we made the decision of incorporating and creating Greenward Partners. No? We're a company that we are mostly focused on energy efficiency and distributed energy assets. Now, basically, our motto vision is what we call energized green equity. So it's basically making real and monetizing both the energy and non-energy value, which is embedded and presently invisible in most of the buildings. No? We try with financing or capital crowding in private financing here. We try to make what's called efficient, smart, and connected buildings. No? So we have kind of a transversal vision of the business, the whole value, from financing deep renovation projects in buildings, through monetization and measuring savings, to the certification of those savings, to the monetization of those white certificates, and the flexible demand as an energy source. No? Basically, we try to make energy efficiency sexy as an investment. No? To give you, a view of what's going on in Europe and then in Spain, which is basically quite the same as any other country. No? Approximately 80% of today buildings in Europe will still be used in 2050, and 75% are still energy inefficient. The renovation rate is really low, far below the targets to reach Paris, and the current finance gap to get to the 2030 objectives is around 325 billion annually in Europe, of which 50 billion is for residential buildings and 75 billion for public buildings. So this is the situation in Europe. What happened in Spain? Spain is still lagging behind. Our renovation rate is below 1.3. We have 23 million buildings. 85% are highly inefficient. But we're doing our exercise, and we're really good. We're really great at setting targets and objectives. Actually, we have as a nation, we have a renovation target of 500,000 buildings units to 2023, which means there is a finance gap of nearly 40 billion euros. No? So that's the situation. How are we going to make it happen? No? Well, here the market failures are exactly the same as in any other place. Exactly the same. This is a very old story. Houses' values does not reflect their building's energy performance. No, there is any actual metric or robust metric in general accepted to recognize the value of more efficient buildings. Split incentive, as always, is an issue unless we find out non-recourse or trying to more financing into OPEX. There's still immature business model for energy efficiency retrofits. There's a complete mismatch between financing needs for renovation and current financial products in the market. Basically, the banking finance system they're interested in the wholesale part, but they're not really interested into underwriting small projects because there are small project finance, so the underwriting cost is really high for them. Not only that, but in order to get to that savings investment ratio that Greg's talked about, 1.1, 1.2, you need to go to long-term loans over 15 to 20, 25 years. And that's currently unavailable in the current banking system. You know? There are not mechanism to leverage public and private capital. It's not green banks, or also the only efforts presently done is through concessional finance or public money, which is very limited. From those 40 billion, by the way, the government estimates that 80% of that has to come from private capital. They don't say how, but they expect the private capital contribute 80% of those 40 billions. No? And also there are still not any active aggregator for small projects to make it fundable, and not any monetization system for flexible demand or distributed energy resource as a source in itself, as you know, playing great services. No, so that's the situation. So what we do with this, not from Greenworld, we were incorporated 2 years ago, and we have a clear target. No, so first we devote a lot of effort and time in lobbying all the administration. We develop a new business model, and we are actually working on a market aggregation and consolidation. In terms of what we have done, we are fans of PACE financing. So fun that we actually managed to find an unused legal institution here in the Spanish regulation, and we use it to carve out from there a PACE system, and actually we retain the name PACE with a different acronym with a different meaning in Spain, but in any case it's called PACE financing. So when you hear about PACE in Spain, we're talking the same thing. With the different tweaks, we actually review like the regulation, PACE regulation of 13 states, and try to learn from past mistakes and make it better from the beginning. It is going to be a national. We will need to go from state to state. It's going to be federal, so it's going to apply beginning. Every state will develop their own administration program, so the municipalities will have a very simple opt-in system to make it PACE available in the territories. And we don't need to create a lien, so we don't have a preferred lien, so we don't have a problem with prior or senior mortgage lenders because of something about the Spanish law. We're using a tacit mortgage that exists for other property tax to apply that. So we basically we have work a lot with the ministries, with all the political parties. Remember that here we have more than 10 political parties, not only 2. So we managed a bipartisan agreement on this, and that has been quite a success. And just waiting for the coming business legislation to make it happen. Could be anything between 6 months and 1 year. We also pushing for tax credits as an alternative, transferable tax credits as an alternative to concessional finance, or just doesn't work very much. Also, creating a market for white certificates as another means for monetizing part of the value on the retrofit for the building owner. We pushing for a creation of a green bank here as a catalyzer of private matching with private equity and private capital, public funds. And well, that, you know, all other sort of things, no, behind. On the business model, we're moving from a pure.
I'm kicking off this morning talking to you about the Biden administration's approach to sustainability and climate change.
Okay.
And the bottom line is that the president is leaning
Somebody mute,
Someone
please.
does need to mute, if you don't mind.
Someone get in there.
President provides the context of the crisis.
Delios, maybe you can
Talks about the
figure out.
coronavirus, the economic crisis, the racial crisis.
Well, can you hear me? Okay, so the business model we are pushing is what we call integrated smart energy platform. So we are integrating not only finance but a technical de-risking methodology through digital platform, the risking proprietary risk platform, and the monetization or activation of value streams from the projects. No? We also developing pay for performance models here, not only pays as an alternative financing methods, ESA, MESA, MEETS. We are matching long-term. We need long-term finance here, so the obvious is institutional money. In order to make room for institutional money, we need to de-risk the technical aspect of the projects. We're talking about 20 years financing and the risk side of the projects, and setting up securitization vehicle to be able to rotate that assets through green bonds, which is a reactive market here. So kind of industrializing systematic technical and financial de-risking system, and also promoting something that doesn't exist right now, which is big and scalable urban regeneration projects, meaning at district scale. No? So instead of going building by building, we go to a district and do it once, which has a lot of economies of scale, and then you can add, it's not only environmental, but social, cultural, a lot of things. No? We're doing good with that. And finally, we are raising it's going to be the first energy efficiency fund in Spain, targeting 150 million, and hopefully to have it in place by November. So that's the target. Also on the market aggregation ratio, this is a very, I don't know in the United States, but here in Spain, it's a very fragmented and inefficient market. There are a lot of these small players, very small companies, everyone working with their own systems. And in order to get the speed and scale we need, there is an obvious need and an opportunity to in a kind of a consolidation aggregation. Also, we are working on a build-up project to create a robust, sufficient ecosystem. No? And then what we're doing is we are kind of uniting the voice of this segment through new institutions and associations, and and also participating in a European project called Fora Una. It's going to be a permanent fora where the finance and the constructions property owners that get together to start learning the different languages, needs, and problems each other in order to make it happen. So that's what's happening here. So happy to answer any question you have.
Eduardo, thanks so much. Terrific conversation. We have a few questions that have rolled in, and I'm just going to go through in about the 6 minutes that we have time for. Coming from Ted Cronmiller. I'll just read it right off here. Wants to know your thoughts on the prospects for amendments to the EU securitization regulation and the capital requirements regulation to integrate sustainability factors and their impact on risk-based capital adequacy.
I'm in the advisory board of a working group advising the Commission on the EU taxonomy. This is a very hot topic, and unfortunately, it's a moving target. It's still to be devised. Definitely, we are moving into a very strict, stringent sustainability reporting. So the non-financial reported of definitely financial institutions and other public companies that will have to devote a lot of new effort and money resources in order to make feasible the sustainability part of the non-financial reporting. That's for sure.
Got it. Thank you. Another from Ted concerning climate scenario analysis guidance. The question is, again, what are your thoughts on using analytics from climate scenario modeling of sustainable residential real estate portfolios for regulators and the banking industry to aligning internal economic capital estimates and regulatory risk-based capital?
Great question.
Very simple question.
Yeah, I would love to see it happen. You know, the devil is in the details, no? And we are still, as Simon told, one of the biggest problems here is access to good data. Not only in terms of size, but smart data. So first, we need that in order to create models and the right conclusions. We don't even have a climate tool like you use there with Caltech. we don't have it here, so it's very difficult to embed that into any monitoring or measuring of any value out of potential or deemed savings. No? So that is going to come, but I would like to see how.
Mm-hmm. Good. Another question concerning the renovation, refurbishment, and retrofit of existing buildings. Your thoughts on EU member states' effort to align long-term renovation strategies with the Energy Performance of Buildings Directive?
Yeah, that we are making amazing progress. No, energy efficiency from the renovation with communication is one of the main pillars on the recovery and resilience plan. In Spain, part of the next generation program, it's around 6,820 million are dedicated to energy efficiency. The building performance rate is going to be revisited, and they're already considering not only a renovation passport to be mandatory, but also they're going to push for minimum efficiency standards for 2025. Probably it will be phased, and we'll start with commercial buildings. Probably it will go down to residential. But from a political point of view, or policy point of view, it's all tailwind. The problem is going to be to find enough smart finance to do it, and people, people workforce to deliver.
Good. Last question then, in the minute or so that we have left. If you would be so kind as to share your thoughts concerning new construction, this will be the new construction side of this, your thoughts on recent updates to the EU taxonomy treatment for new construction of buildings and revisions to the technical screening criteria for climate change mitigation.
Well, we are, any new construction has to be presently near zero. So that's is a big move. So the problem nowadays is not on new construction, it's on the existing construction. The existing building is where we have a major issue. No? In terms of this is about climate, and the buildings are 1/3 of total CO2 emissions. So we're talking about decarbonization of the economy and the atmosphere. So it's the big problem is the existing buildings, not the new ones. The new ones, the new codes of irrigation, and they are almost near zero. That's the norm now.
Good. Well, I think it's about time for us to wrap. Eduardo, muchas gracias.
Thank you.
Thank you so much for taking the time to join us.